Hello traders and welcome back to another trading week with the team and today's daily watch list. Today we're going to start looking at some possible setups for the week. Remember that this is only for VIPs, but today I'm making my daily watch list public. So if you're not a VIP and you're watching this, and all that I'm saying here and all that we're looking at here makes sense to you, well, then I'm going to leave a link below this video for you to be able to join the VIP group, right? So let's start by looking at the DXY. The DXY closed very bearish last week, and on the hourly, let's start by looking at the hourly, right? On the hourly, we are trading below the weekly pivot and below this massive level, the 92.28 to 92.30. And well, last week on Friday, we broke with that short-term bullish structure, right, that we were trading in. Right now, we are still trading below these levels. This is the level that I'm looking at, and right now we are seeing some bullishness in the US dollar. You can see it right here on this hourly candle. So what we're going to do, we're going to wait to see what happens when price retests back the previous broken level, right? With this surge in buying or in buying pressure, we're having some buying momentum, right? But this is, to me, not bullish, right? Why? Because we are still trading below this level, below the broken level, and still trading outside of that bullish structure that we broke with. So what we're going to do, we're going to wait for price to retest this level and see how it reacts. So if we have a rejection of this level, we're going to start looking for shorts today on the US dollar. And if we break to the upside, right, and the price stabilizes around the 92.28 to 92.30, then we are looking for longs today, right? Right now, we are still waiting for that, for those two scenarios to play out on the DXY, right? On the 4-hour chart, it looks bullish, right? On the 4-hour chart, still looks bullish. The make it or break it level for bears is the 92 level, right? The previous week's lows or last week's lows, right? If you remember when we broke to the upside on the previous week, this is where we saw buyers jump in this market, right? And again, when we retested that level, you can see that a huge buying momentum took place, printing new highs, new weekly highs on the DXY. So the level that we were looking at on the 4-hour chart, right, is right here, the 92.30, like I told you before. And we are going to wait to see how price reacts to this level. Why? Because right now it makes no sense to jump into a trade with the US dollar trading inside of this range. So if price rejects the weekly pivot and that 92.30, then we are going to have very good risk to reward ratios on US dollar shorts. Now, this is going to, well, if this scenario plays out, this is going to be a short-term trade. Why? Because we have this massive key level to the downside where buyers are going to be jumping in, and we don't know, no one knows, right, if sellers are going to be strong enough to swipe all the buy orders that are placed there to continue the downside in the US dollar, right? Fundamentally speaking, we continue to be bearish on the USD on the very long term because this round of quantitative easing has not been tapered down, right? Well, we are still riding that momentum from the FOMC week, where the Fed announced that they were going to start hiking rates to face inflation, right? So let's see some structure here in this market. If we look at the structure or this 4-hour channel that we are trading in, right? It's still bullish in the short to mid-term, right? But should a price reject that level and continue to the downside, here is where we are going to look for very strong shorts should price break with this structure. So that's the US dollar. Let's have a quick look on metals. So gold, all metals are looking very, very, very heavy at this level. Now, I'm still writing those longs in gold, but I will close them if price fails to hold the 1790 level. Why? Because if you look at the daily, right, if you look at the daily, this is a massive level that gold buyers were unable to break with, the 1815 to 1817, 1818 level, right? And right now, today's candle is looking extremely bearish. So with all the tests that buyers did at the 1816 levels and were unable to swipe all the sell orders here, it's pretty plausible that sellers are going to take control. More so if you look at the last 4 to 5 daily candles. It looks like we are printing a reversal here in gold, right? Now, on the 4-hour chart, this is what I'm looking at, right? On the 4-hour chart, we are still trading inside of a range. Now, the range is last week's highs and around the 18 and 19 level. And, of course, the 1795 level, right? Which are these lows and the previous highs that we broke with to the upside. Now, I'm not closing my gold longs here because if price comes back and retests the 1795 level, we could find more buyers here and push price up, right? If this scenario plays out, then I'm going to be very careful with that 1815 level again. But metals on the daily are really, really looking heavy. Now, on the hourly, it really, really doesn't look like much. It really, really just looks like a ranging, like a range that gold is trading in, and with one massive bull trap to the upside, and a heavy, heavy, heavy level to the downside. So unless we break to the upside or to the downside, we are going to stay away from this market for short-term trades, right? Let's have a look at crude oil. Now, crude oil, crude oil looks, again, bearish on a retest of the highs. Now, the daily doesn't look like much, but if we look at the 4-hour chart to start with, right? So last week we broke with a very heavy bullish structure in crude oil, and now we are retesting this. We are retesting back that broken structure, even though we had here some very high volatility. But you know, this retest might not be as high probability as a retest without this up and down candles, but still it's looking very, very bearish. Now, the hourly also looks bearish for today. We could actually get into a trade here. But let's see if the risk to reward allows us to. So, and actually no, because there is no setup on the lows, but yeah, and the risk to reward ratio here, it's just off. But if you are a crude oil trader, be careful with this also being a bull trap. And this is why I'm telling you that there is no setup to the downside. There is no setup to sell because, well, we are trading above the weekly pivot, right? And we are trading right here at this level, right? here at this level. If you look at historic price action, this is a massive level that we have to be looking at, right? So because there is no setup to sell this market, and more so because we've had two very bullish days in historic price action, right? This could actually be just a massive bear trap, and price could continue to the upside. So we're going to stay away from commodities at the moment because of high volatility and because of the lack of good setups. Right, so let's go and let's have a look at some major currency pairs, starting with the EURUSD. So the EURUSD, right here, let's go ahead and look at the 1 hour chart. The EURUSD, again, like I've been telling you before, what I don't like about this is that there is absolutely no level here on that spike low, right? So to me, the daily doesn't look like much, but if we start looking at the lower time frames, right, a 4 hour chart, for example, the 4 hour chart, we're looking at a back test of the 1880 level. So last week on Friday, on my live session, I was telling you that I was not going to buy right into this weakness on the EURUSD. Why? Because of this massive level. And what happened is that we closed. Well, I don't know where we closed, but yeah, we closed below that level. I'm sorry, and right now we are seeing some selling pressure here. So unless price breaks above the 1880 level and consolidates above it, we will look for longs on the EURUSD. Shorts, shorts. There is no setup. Let's go and have a look at the hourly chart. Again, same story. We could actually look for some shorts at the break of today's lows, but the risk to reward ratio to first targets, which is Friday's lows, is just off. So there is some setups that there is some signals actually that I have in place that I'll be sending after this after I record this video to the VIPs, right? Let's have a look at the pound, the GBP USD. Let's start by looking at the daily on the GBP USD. Now, the GBP USD, and let's just get rid of this. The GBP USD does look bullish to me. And the difference between the Euro US dollar and the GBP USD is that we did find a lot of buyers at a massive key level, right? So to me, this is bullish, right? So I'm looking for longs here on the pound against the US dollar, right? On the 4 hour chart, there's a lot of lines here, right? On the 4 hour chart, let's draw some lines together, right? Some levels. On the 4 hour chart, right? We are retesting back the 139 level, and well, we are breaking with today's lows. Again, this looks bearish on the GBP USD on the short term, right? And it's kind of the same story as the Euro US dollar, right? We are not going to buy right now, even though I'm looking for buys, right? Even though I'm looking for buys, we are, however, going to buy if we have some kind of stabilization around the 139 level, but it doesn't look like it, and price is trading around it. So we might actually get into a breakout trade. So I'm going to leave this, and because I'll send you guys the signal, well, to the VIPs, right? If you want to be part of that, the link is below the video. So the USDCAD, on the USDCAD is another one that I'm looking at on the daily. Let's start by looking at the daily, and Yeah, I mean, we are trading in the middle of nowhere on the daily, right? Again, the daily doesn't look like much. Yes, it looks bullish, right? I mean, we could say that we are retesting back the 124.50, the 124.50 level, and on the 4-hour chart. On the 4-hour chart, again, we are trading below that 125 level, that massive 125 level. And we don't want to be involved to the upside here because we don't want to get involved in a fake out trade on a breakout, right? So it all depends also on the direction of the DXY. If the DXY starts to sell off, we actually are going to be looking for shorts. And the reason is this, because on the hourly, right, this is a no trade zone to me, right between the 124.90 level and the last week's lows around the 124.40, right? So this is a no trade zone. And like I told you before, it all depends on the direction on today's trading on the US dollar, right? Personally speaking, I'm looking for shorts here, and I will be sending that short signal in a moment. Let's finish up by looking at the pound yen. I know everybody loves to trade the pound yen. The pound yen actually, well, it's kind of difficult to actually see some direction in this market. Friday's candle was extremely bullish, right? So that we have that right on the daily. Friday's candle was extremely bullish. It engulfed Thursday's candle. On the 4-hour chart, however, we are again trading in the middle of nowhere. So, but the difference here is that price is stabilizing above that 152.80 level. So this is what I like about this market. Price is stabilizing above that level, above the weekly pivot, and after a massive bullish Friday. And on the hourly chart, actually, right here on the hourly chart, today's range is absolutely tiny, right? We are trading inside of a 30 pip range when we saw Friday's range be about 200 pips and Thursday's range be about 210 pips. So just by looking at daily ranges in past few trading days, there could be an opportunity to trade this market whilst it's trading inside of this tiny range. Not whilst it's trading on inside of this tiny range, but when it breaks out of this tiny range, because the average range here on the past, let's call it past 1, 2, 3, 4, 5 trading days should be around 130 pips or so. So we could have a 100 pip run in this market. And again, because of Friday's heavy bullish day, we are looking for longs on a breakout of this range, right? This is it for me. The US dollar Mexican peso. I was asked about this market on Friday. Again, inside of a range. This is the hourly. But I mean, if you just look at the hourly, right, we're trading inside of a range, and right now in the middle of nowhere. I wouldn't touch this market just because we are trading without key levels. I mean, true buys should be around the 1973. True sales should be around the 2015 or so. But to me, there's absolutely nothing here, right? And let's finish up with some equities. Right, the Dow testing. I mean, the Dow. I'm still long on the Dow, and actually looking for the possibility of adding today. But I mean, it's too early in today's trading day to be talking about trading the Dow. More so because we are trading at around these highs, right? So let's see the 4-hour chart. Yeah, around last week's highs. So it's still too early to be talking about adding on to my longs. And the reason also because we could see a dip to retest the 34,679 level or Thursday's highs, right? Before a bullish continuation. This actually would be a very good deep buy level on the Dow because it's in confluence with the weekly pivot. And the Nasdaq, again, same story. Same story. We could be, price could dip to the 14,750 level or so around the weekly pivot and these highs right here. So I'll keep you guys posted on the VIP group if we decide to trade this. Let's have a last look on metals. Right, gold. Again, still dipping very slowly. Gold is negative 0.45% for the day. But again, trading in the middle of nowhere, right? Inside of this range, where big buyers have been jumping in at the lows. So we might get a dip to the 1794, 1795 level. And that's where we will see the real direction in this market, right? Right, so we had this video went a little bit longer than I expected, but have a great trading week. I'll see you guys on the VIP group.